Mic check. Mic check, looking good. All right, hi everyone. Hope everyone is well. Welcome to another end of week review. My name's Tim Fairweather, and I'm going to go through the futures chart for the German index and for the UK index. Really interesting price action of late. Let's go and take a look. So I'm on the, I've got the FDAX here. What I might do is I might just switch to the Globex chart. So with the overnight price action in there, and then we might switch back and forth. So I've got the monthly chart for the German market. You can see last month was basically a bull reversal bar. We had big down, big up. Now this is a trading range bar. You might find some trading strategies that like these. They're called, I think they're called hammers, aren't they? So a lot of traders build systems around here. This is two-sided trading. If we zoom into this bar, this is going to be a trading range. And trading ranges generally get measured moves. So those traders who are buying above that monthly bar, here's a breakout to a new high. Weak bear reversal bar. So selling under that is low probability, but the traders that did, they got 2 to 1. They're pretty happy. We tested the moving average. We broke out of a wedge. There's probably a few ways to draw it. You know, we're in a bull channel. Low probability to break out and get another bull spike and channel, but we did. And then that creates a test target. Wherever that wedge is, traders that were fading that, we usually come back and test. So we've broken out of that wedge. We've come back and tested that price. And then somewhere in here, you know, maybe that's the layer of support. So that gives a very far away measured move. Remember, this is a monthly chart. So that's one way to look at it. These two bull bars are the strongest bull bars on the chart. Often the two best bars are at the start and the end, and sometimes these can fail and roll over. Now, interestingly enough, because this pulled back so much below that bar, I think there's going to be sellers above and beyond looking to do the same thing. There's no sell signal for them at the moment. But whenever traders can sell above a bar, above that sell zone, and make money, they're going to continue to do so. So monthly chart, we triggered a buy signal. It's a high one buy. Traders will be watching to see the follow through. Because remember, you're taking a buy signal within the context of a trading range. And so you need the breakout to confirm on the monthly chart. Let's have a look at the weekly chart. So you can see that big down and big up was that trading range. So we had a spike, and if you are somewhere here, hi to those that have just joined, hope you're well, hope you're having a great weekend wherever you are. Here's a type bull channel, and we've got a breakout and a test, and then up, pause, up. And at the time I said this is a parabolic wedge, so we're expecting two things. One is some kind of correction, but also a second leg up. And you don't know just quite how deep it's going to be until you get a decent reversal bar. So if you were long and you get that, usually better to get out and try and buy a pullback. That pullback's incredibly deep, but this is not a good sell signal. On a high time frame, this is a big bull bar that's pulled all the way back to the buy zone. Okay, if I do that, maybe the buy zone is in the lower third here, maybe it's a little bit lower, but selling here with a stop up there is not a good trade. The traders that took that, okay, so if you sold there with a stop up here, probably above the spike, you were not able to get 1 to 1. And often it's good to get your fib tool and measure out half R. So when traders scalp out at half R, that's a warning not to take stop entries in that direction. Or I believe it is anyway in my trading strategy. I want these traders to keep holding for a strong second leg. When they get out at half R, which is a scalper's profit, it's time to get out of the way. Not a great buy signal, but also not a great sell signal. You're low in the range, traders buying, looking for more up. Now you've got an inside bar back at the moving average. Traders that bought there, bought lower, they're okay. At the moment, only the bears are stuck if they sold underneath that bar. So two things can happen. One is we can go down and let them out, maybe keep going. Sometimes, if it's counter trend, this is a strong bull trend, these bears get trapped. And that is good looking trap bar. So if you are short and you're scaling into a short and you get that bar, that's your signal to get out of the way. Now, there are two sides to every trade. Traders that didn't buy this bar and didn't buy this bar see that and they wish they bought. So they might decide to trade small, buy, and they'll either scale in lower or higher. Now you've got consecutive good-looking bull bars. From a breakout perspective, well, what happened? Did we break out of anything? No, we didn't, but bears are stuck down here. This is 4 bull bars in a row. It's a bull micro channel. These bars are incredibly strong. Probably about 70% probability at this stage that if you buy and scale in lower, you're going to make money. Now you've got the first close out of that range. So this is, I think, a really good example of why counter trend trading looks easy when you look at a channel. Yeah, just sell above the high, sell above the high, sell above the high, sell above the high. But at some point, you get stuck. So what do we think the next bar is going to be? Well, 5 bull bars, you can argue, oh, I think it's time for a pullback. But also, we have closed above that range. So next week's important. We need to see a breakout for the bulls. If the bears could create a good-looking bear bar, I don't think it'd be a sell, but it's probably going to start going sideways. This spike's probably going to turn into a channel. And then that is the spike that projects the measured move up, trapping those bears. I don't think it's going to quite go like that at the moment. This is a fairly impressive selling. They move the market down 20%. Usually when counter trend moves are this good, as in counter trend traders can make swing profits, they sell in the top third, they sell above, they sell a measured move above. So I think they'll be doing that. So next week, always in long, strong breakout, strong follow through. And this will be good to look at on the daily chart as well, so you can get an idea. One of the things I try to do in the Brooks price action trading room when I'm live streaming in there, try and help traders see higher time frame and lower time frame patterns. The market's fractal, and you just need that practice for your eyes to zoom in and out. That way you can change time frames while you're trading and you don't get stressed. If a higher time frame is in a trading range and then a lower time frame is in a bear trend and then another time frame is in a bull trend, you're like, yep, that all makes sense. But it can take a while to train that. So took me many years. And I didn't even know what the problem was. So I think you guys got an advantage. Someone saying, hey, train this ability, and that'll make trading a bit more relaxing. So let's go back. We've had 1, 2, 3, 4, 5 bars there, because there are interesting little pieces in all this. So there's one piece here, which is interesting. We've got a second piece here. So here is a strong bear spike. And then you get this. So anyone that sold down here, sold above a bear bar, sold above a doji, maybe sold a certain distance to that breakout point, none of them want this to be their entry bar. No one wants that entry bar. You want a nice tail. If you're selling, you want instant reversals, that kind of thing. You don't want this. But at the same time, if you're flat and you see that bull bar, you can't buy here because this is a bear spike. This puts it into a trading range. I'm at the top of something. I need to see how the market develops. You can also say this is a volatility expansion, and then we squeeze volatility contraction, and then we're expecting expansion up, down, or more sideways. It wasn't until 1, 2, 3, 4, 5, 6, 7 days after that, the traders wanted to buy that price again. This was a common mistake I used to make for a number of years. You might call it a second leg trap. It's basically we're always in short, and the moment and I'm not short, I can't make any money short, and then I see a bull bar and I decide, oh, that's what I should do. But actually, everyone that was short had a chance to get out break even, I think. If you sold the very bottom tick down there, and you sold more at the close of that bull bar, you got out break even. If you sold in the top third of this spike, you got out break even. No one got stuck down there. If you sold this bear bar here, good looking bear bar, you had 1, 2, 3, 4, 5 weeks to get out of that position, so you're okay. I've just noticed the symbol's not there. There we go, that's better. So you can follow along. Hi Solo, thanks for stopping by. Hi Tim, during our last prezzo in the BTC, heard you mention to come join you in the Euro session. That's right, mate. So you need to join the Brooks Price Action Trading Room. Go to Brooks Price Action as usual, where Dr. Brooks sells his course, and we've got the live trading room in there with a couple of us presenters. And then if you join the trade room for the month, I'll be trading Euro 20th and 22nd. So we do a live trading room for ES every day, from open to close. But we're trying to test out the Euro room. I trade Euro. Another one of the presenters, Tim Stout, great trader. Try and catch him online if you can as well. He also trades Euro. And a friend of ours, trader Tom Hugard, also trades Euro. So we're just trying to give people more opportunities to find a style that's going to help you learn. So yeah, be sure to check that out. It should be fun. Probably trading, DAX or FTSE. We can also trade oil, but I think FTSE and DAX will be pretty good. Both have the ability to trade futures contracts from the exchange. Both have the ability to trade the CFDs or Globex charts, so you can scale down or scale up for your account size. So practicing proper risk management. So this bar, we're here. Hi Big Chip, which of ours books? Yeah, it was number 2, trading ranges. So I kind of brushed through trends incorrectly, thinking, yeah, mate, I'm too smart. I know all this stuff. I know what a trend is. But I found when I got into trading ranges, that kind of broke all my ideas, my very weakly formed ideas of how the market works. And then there's trades in there on the mathematics of trading and the trader's equation. And it's a bit repetitive, but I actually like that because you keep reading it and it just trains in this idea that even though this bull bar here got a breakout, there's traders selling this bar. We're in a bear trend. They're going to sell that moving average and scale it. They might take a loss. They might make a lot of money because a breakout this big should get a second leg down. So 60, 70, 80% of the time they're going to make money, and this just happened to be the time that they lost. And so once you kind of realize that, you stop going, oh, this is the right trade at this moment, and say, well, actually at every moment there are multiple right trades. It's up to me, my style, my personality. What do I think the read is? What's my trading strategy? What's the right stop location? How do I manage it? It becomes a bit more personal to season to taste, as they say. So yeah, that was a great book. Yeah, BDC website, check it out. Yeah, so Trading Ranges, great book. Definitely check that out. So this, I don't think was a great buy because we hadn't broken out of there, but now we've got this bar. This is starting to look pretty good. Now we've got consecutive bull bars. This one's looking even better. So one of the exercises I recommend traders practice is called shaved bars. Let me just find the video for you on the stream. Oh no, it's on my blog. 1 second. Okay. So Zen Trading Tech, and go to shave bars. So this is an exercise So I wrote an indicator which shows it. I'm just looking at whether the bull bar is shaved on the bottom. So as soon as it opened, it took off, or the bear bar is shaved on the top. As soon as open, took off. So this indicator just, measures, is the tail, 20%, 10%, 5% or 0, whatever. The point is it puts arrows, and this is really good practice for reading price action. How come with 3 bull bars here, why did traders sell the close? What happened there? Oh, that's the open of the day. We've been down all day. We finally got back to it. Well, a day that opens with this stronger bear momentum, good chance of being a trading range for the next 4 hours. So everyone sold, and then it wasn't until an hour later they started to buy. So these are like these little price action details. How come when the market was here, this is not shaved? But here it is. Oh, because there's the spike. 2-legged move against, we break a trend line, and then 1, 2, 3 legs down. That's a wedge to a double bottom. That's a buy signal. How come they didn't buy there? How come they waited to buy down here? I think it's just a really helpful drill to practice. So I pay attention to those on the chart. Yeah, the late MY sessions. Yeah, when I was in Oz, I just always had to watch the replay. I eventually was just waking up early to trade the end of Dow, but just trading too late. Just it's really tough. And then trading the Asia sessions, really tough as well. So I reckon if you could make it as an Aussie trader, far out. It's a bit like Australian snowboarders. Australia is not known for its snow, but mate, if you can snowboard on ice, you'll do great on actual snow. So strong breakout here. I thought it was interesting that if you didn't take any trade until this point, so traders bought here, they didn't buy here until there was a gap. Then we've got a breakout and follow through. Then they started buying below. So we've got spike, pause, probably going to get a new spike up, big spike. So one of the tricky things about trading is when it's very, very clear, that's usually when it's about to pause. And when it's in a pause, that's actually quite a good time to get in because the market's about to move. And that's really difficult because when you learn to spot patterns, you're waiting for signal bars like this. You get in, and then depending on your time frame, you're like, oh, did I do the right thing? Oh, is it the top? Is it the bottom? And you talk yourself out of it by the time it actually goes your direction. So, or you took a small profit and you missed this. And then you buy up here, but the highest probability of this bar here is actually to go sideways. And traders did sell. As soon as that bar closed, they sold. So this is now a magnet, and you see we come back and test it. Now we're at the top of the range. So the same thing that happened here is going to happen all the way up. So now we're at the top. One, up, pause, one more leg. Or is this already 1, 2, 3? Only 2 bear bars, nothing to sell. So I think it's a buy and scale in lower. But you can see we're in a channel now. So probably sideways to up. We're now at new all-time highs on the 24-hour chart. On the futures chart, not quite. 23,600. On the DAX. I'm not sure if that's the correct way to say it. I'm Aussie, so I would pronounce it DAX, which is very Aussie, but I'm sure that's not how the Germans pronounce it. So what do you do here? Well, stop's far away, but probability is high. So, all these tails are here. It looks like traders are scalping. So if you see a pattern that you'd like to trade, it's usually a good thing to go down a time frame. That can often give you other options to trade. Here we're in a small pullback bull trend, but we're also in a tight trading range. So you're looking for pullback to the moving average, or a failed attempt, a failed reversal attempt that doesn't get follow through for another leg up, but pretty tight. Hi Solo, saying right now BTC is the only live guidance. Yeah, it's difficult to get, mate. Yeah, I think it's, you got to take the theory into live trading. is difficult. And what can be annoying is that when you listen to a presenter or another trader and they said, yeah, well, I didn't take this trade because of this bar. And you said, well, yeah, but yesterday it was the same bar, but you took it. And they say, oh, no, but the context was different. And it just seems like that's always the answer. And that's because there's just a lot of little details in trading that have to be present to filter out, make sure you get the higher probability trades. The easiest one to learn is breakout second legs, I think, for a newer trader. And then you can kind of customize it. I've got a video on my YouTube about drawing zigzags. So here's a breakout, right? When you see this bar and you're flat, well, the first thing a newer trader wants to do, and I spent years doing this, is I'm looking to sell. Why am I looking to sell? Because I didn't participate long and I'm only concerned about small risk. I don't want to put a stop down here, and it could be the daily chart, it can be a 5 minute, doesn't matter. But all I see is risk and I miss probability. And then you take a loss. Or worse, you scale in. And then you finally go long and it goes sideways. So you see how I'm out of sync? So the easiest way to get back in sync is to follow breakouts. And so you can check the video on my channel, but going through the chart and putting zigzags is going to train the eyes, because this is a tail up and down, to look for second legs. Leg one, leg two. So practicing that just until the eyes start to do it automatically. That's going to stop a lot of those counter trend trades. Okay, so that's DAX. Let's take a look at Footsie. And it's time frame agnostic. So even if you don't trade Footsie, I think it's helpful to review a second chart that's not the one you trade, just to remind yourself that all the price action is exactly the same. And that way you're going to see twice as many patterns, do twice as much practice, and probably improve faster. So let me just fill this up 1 second. Other trading videos come up on my YouTube, and it's all about guys in like helicopters and Lambos, champagne, that this is some kind of trading lifestyle. I don't know what that's about. I mean, I'm a full-time trader. I just spent 4 hours today reviewing my last month's worth of trades. I'm recording a live stream. I mean, all the professional traders I know, they work really hard. We get paid to study. So, if you want to improve your trading, don't be afraid of doing some hard work. Stay away from the Lambos. So, okay, so monthly chart here, similar to DAX, except this was a pullback into that range, but this actually broke below all those swing points. So Footsie is not as bullish. Anyone that was buying and scaling in lower probably got stopped out. Footsie, for the past few years that I've been writing my market reports, it's just been buy the moving average, buy the moving average, buy the moving average. It's been pretty straightforward on the higher time frame charts. More difficult on the lower time frames, but high time frames a little bit easier, if that's the right word. I want this EMA. Where's the 200? No 200. Let's go. There's nothing magical about the 200, I don't think. It's just a higher time frame chart. Oh, I don't have 200 bars on the chart. Oh, sorry. Take it back. So we had a breakout above this attempt at a wedge. We created a gap and then we broke through. So now we're in a trading range for sure. The bottom of the trading range might be there. The top of that trading range could be a little bit higher, but this is a bad looking high one. Okay, you got a breakout, and the pullback's stronger than the breakout. So this is more likely to be a trap. So, you know, I think this price is going to be a sell. That wouldn't be touching anything long here. 88 was my long-term target, and since we hit that, it's been a bit tough for the bulls. Tight trading range up here. Now you see this spike. So if we look at, we're on Footsie on the weekly. I'm just going to switch to DAX. Remember that pattern? Maybe I can just pause it for a second. Do I not have a pause button? No. Remember that pattern. So same pattern. We're up at the top of that pattern. So because we're up the top of a sell climax, yeah, this is a lower high, but this bar is the top of that climax. And that's what a lot of bears do. That's where bulls take profits, and that's where bears sell. And so even though this is 4 bull bars up and should get a second leg sideways to up, if this is a good sell signal, bears will sell and sell higher, I think. So good to see those two charts. That's Footsie and that's DAX. So this follow through is really important. So I'm going through the channel. Yeah, nice. Provide commentary during the Euro session. Yeah, get Al's videos are great, and it's great to hear the other presenters as well, because they're presenting very similar material in slightly different ways. It might suit your personality. There's a real personality part of trading that doesn't get mentioned a lot. It's mostly about the setup, but I know loads of different trading strategies that I just can't trade. As soon as I add size, can't trade them properly. They just don't suit my character. So, you know, breakout pullbacks suit me. Sounds simple, but yeah, it suits my understanding of the market. So weekly chart, it's a sell signal, but not one you take. It's more like a sell signal to see who's there, because you've got open gaps below. I think if you're a bear and you sold down here, I like to think about, you know, the unluckiest trader who sold down here. Their break evens here. So there's probably a sell scalp Footsie to that area. I would take 5 to 10% off that area, because you know you want these bears to stay in, but some of them might start closing early. So we'll see. You know, so if you say you're short a contract here, and then you're selling 2 or 3 up here to get back there. So and then if next week is a big bull bar, then those bears are going to get really trapped, and then they'll probably get flipped up to 93. So this daily chart is not super bullish. So this is small pullback trend, that's great. Big bull bar, bad follow through. 1, 2, 3, 4. This is the start of a trading range, and that's going to put resistance above there. Bulls are going to buy pullbacks, you know, probably below bars. So the buy next week's probably 84, you know, back into this range. Nothing to sell really. I think we're always in long, so I prefer to scalp to the long side. We failed that breakout. So you imagine breakout, pullback, test that area for a second leg down, but did not. Now we're back inside that range. The top part of that range is up there, and so the trade here is to there. So if bears can actually close down there, that kind of invalidates that trade more sideways. Any other questions? I'll just wait for the delay to play out. Let me know. That's DAX and FTSE for next week. I mean, we could do some ES. There's a lot of traders do ES. I think I'll leave them doing ES. This bar I called last week. Well, at the start of the week. And the week before, actually. I said, this is a really good looking bull bar, but no one wants to buy up here. Okay, so we just went through DAX, we just went through FTSE, top of a sell climax, moving average, this is where traders want to sell. So I was like, really low chance for that being to be a bull bar, and traders sold above it. Do you want to sell below that? Not really, but I wouldn't be surprised if this drifts. You know, bears might do something, but it's more Tokyo drift than it is, you know, it's a low and we're going to go up to 6,000. This needed to be good follow through. It could still happen in a month, but April, May's where the bulls wanted to do it. Solo, I think your styles are most approachable. Oh, nice. Yeah, nice. Everyone's got a little personality. I would just take loads of notes and just try them out. And there's this weird fetish for back testing that I've noticed with people. They're like, oh, I wrote down that idea and, you know, I've just done like 4 years of back testing. I'm like, nah, man, just try and trade like $1 a point and just practice it for a few sessions, you know, and get a feel for what environments it works in. And, you know, if you have 11 losing trades, then that style's probably not for you. You know, like Friday. Let's just get a yes up. Friday on the open, gap up on a bull bar at the moving average. No one wants to buy there. We just broke below something we need to test. 1 test, 2 test, and a sell signal. If you didn't sell there, you can sell there. If you didn't sell there, sell there. If you didn't take any of those sells, selling there is not a good idea because there have been 4 signals. And so you're selling there. Yeah, you didn't get stopped out, but you've got to put a stop up there, which kind of sucks. And then if you don't sell there, well, then you need to wait for a pullback. Leg 1, leg 2, possible sell. Maybe you got stopped out. But at some point, you're selling for a second leg down. You know, that's the. If you want to lose lots of money, spend a lot of time trading counter trend legs. That's really tough. You're just constantly getting dojis because everyone else is trying to get in with the other side. But as long as you were short and you had a wide stop, you know, none of these traders lost money. So, you know, pick the always in and just trade that direction. On this day when I was in the room, it's unclear. You could sell with a stop above the high, you could buy with a stop down here. No one got stopped out, right? You see this wedge bottom sitting on the trading range from yesterday, sitting on it. It hits that and does that. Well, that's a buy the close, which is what I said in the room. If you don't buy that, you need to buy the follow through. That's the follow through. Even if you don't buy, at least don't sell. Because everyone that took these need to get paid and they're going to start selling 1 times and 2 times, right? So you even if you don't take it, you just get out of the way. And then anyone that's sold up at this point, you know, draw a line through there. And I think that's a really good stage to be in. Either you take the trade or not. And if you don't take it and it's a swing, just stay out of the way. Don't get stuck doing this, which I did for years, you know, trying to counter trend scalp. By the time one of these work, you've taken 5 losses. It's a really sad way to trade. But I researched it effectively over a number of years and it sucks and it doesn't work, so don't do it. Hi, Italian, Milty Friedman. Why does the BPA live stream? It's so right. I'm not sure what that means. Weekends. Oh, why does it feel so right? I don't know. I mean, it's always easier to observe price action when the market's closed. That's why a lot of traders prefer the weekends, because it, you know, a lot of traders actually will put positions on. If they trade the weekly chart, they'll have it good to go. A lot of the market wizards, if you pick up that book, a lot of them put the trades on and then don't watch during the day. So keep it impartial. So, okay, so market was always in short. Thursday's close. Oh, yep. Do you think on Friday's open was likely to get a second leg down after a pullback? Yeah, absolutely. But I think the way to look at it is, okay, so the question is, should this get a second leg down? Now, my answer is, yeah. 70, 80, 90% chance you're going to get a second leg. The issue is that bar is a second leg, but it's not relative to that. Okay, so you say, okay, I'm confused. That's the layer of support. We're going to come back and make an attempt to close that gap at least twice. That's one. That's potentially two. Even if you don't take that sell, this one's okay. But you're trading this whole range, you know, probably from there for a swing down, or maybe this whole range. But you're saying that was a trading range we broke out, and I'm going for the lower part of the range. Do you expect it to go that far? Probably not. And judging by the price action here, no one else did either. That's a lot of counter trend bulls buying low. Okay, so bulls are going to do the opposite. They buy there and they start scaling in. You buy there and you have positions, measured moves down. Never had to add on here. So what are they going to do now? So they're on small. What are they going to do when we come back down again? Now they're going to come on heavy. Because they're like, we didn't even have to scale in. At least that's what I think they do. Then you get into the low third. They don't even have the orders at that breakout point. They're all buying in the low third. Because they don't want to miss this. And then if they get stopped out, we go down again. So you just described how my stop loss was hit. Maddie, yeah, it happens. It happens. Yeah. So you put a stop. Hey, can you tell me where was what bar did you enter on? Did you sell 14? The last sell was here, the inside bar, but I was watching, so I was late to the session. I had some Aussie mates who were here, and they're heading back to Australia. So I started trading on 12, and then 13 popped up, and I was like, nah, man, that's not the bar I want. That's not the second leg I want. I want it to close below and then go for this low. But so I have to muck around in here. Bar 12, stop above leg. Yeah, so you put a stop above there. But did you close for a loss? Okay, well I'll show you a little trick. Show you a little trick here. If you sell late, you sell small. Okay, so if this goes down, congratulations, you got a win on a small size. Take it, happy days. Be early next time. What some traders do is sold here, they put the stop in the right place, and look what happened at exactly 50% of that stop. So if someone's selling a contract here, so one contract with this size stop, means they can sell two contracts with this size stop. And then that's where they get out. Yeah, so at least you did the right thing there. You traded very small. So that bit's perfect. You know you're selling late, but you want to be short. Okay, I'll trade small and see what happens. What traders will do is say, well, where was the place I wanted to sell? Let's take a 15-minute chart. And this was the problem. The 15-minute bar sucked. The 15-minute bar was the breakout below the range, but there's no like interim bar up here. So it's either selling here 50% or the high. And that's what I thought the problem for the bears was. They got their target and they were done. And then that swing's done. And that could be the range for the day. And sometimes you spike and you're sideways. So go through your trading days and see days that have an early swing and then nothing for a few hours. And you've got to come up with a way for you to trade. You know, you can see this bull bar right on the bottom third. That buy didn't work, but they didn't get stopped out. You know, you wanted to sell up here, didn't get there. You're probably not even trading by the time it gets to here. So, Italian, I sold below 3 Where's your stop? Then sold again below 4. No, I wouldn't have done that. Sell below 3. Was 3 didn't get triggered? Yeah. So this is what you need to do. If you've got an order to sell below 3 and it doesn't get triggered, you pull that order. Because there's no stop entry bears there. Bears could sell the close. But some traders, because it's the first reversal, will trade small and wait for another signal. Other traders sold the second reversal on 9. Or sold 10 or below 5. They're like, yep, I think all the bulls are holding a terrible position. Something like that. Yeah, then you reversed. Yeah. No, look, I spent a lot of time doing that stuff because you've zoomed into this, and this is why trading a lower time frame is a nightmare. ES moves between 60 and at the moment, you know, we've had some days that are 100, but basically about 60 points. This is the range. And so let me draw that. What, 40? Okay, so that's the range of the day. Now it might be there, and it might be there. But it's not going to be above there, and it's not going to be above there most of the time. And if you take too many trades in here, you forget that we're going to cover this range. All right, if you look at the daily chart, there's only less than 10% of the bars are inside bars. Okay, so I would, as a practice exercise, go through the daily chart. We didn't even do the regular range. Yeah, so what I would do to try and fix that, my suggestion would be to go look at the daily chart here and count how many inside bars there are. I can cheat. I've got an indicator that's going to highlight for them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 bars out of 100. Isn't that what I said? 10%. So 90% of the bars on the day go above the high or below the low of the day before. And that means their range is the average range. If I put an ATR and ABR, it's about 80 points at the moment. So when you're trading in the open and this range is small, you know it's going to break out. You just don't know which direction. But when I'm in the live stream, I do this. I put a box around it. When I was in the stream here, I put the box around here. So you measure it out, put the box around it, and you know with 90% certainty we're going to expand this range. Could be down, could be up. I don't care which way it goes. I don't want to scale into a loser. I want to try and participate. So that strategy itself would have helped there. Maybe it's worth me doing a video on that actually. Does that make sense on the opening range? I lost so much money on the opening range for so long. Oh my goodness. It's just throwing it away. And then I get so upset, miss the swing. Hi Wei, hi Jamie. Sold below 3, targeting 5 point. Yeah. Yeah, one of the real challenges is if you work on your trading during the day, you feel great. You come in a session like, I am ready to go. But that, like you said, that overconfidence usually gets slapped out of you early. Or it works today and then tomorrow you get the slap. But eventually, it goes back to neutral. So I'll just write a note. Maybe I'll do a short drill video on that opening range because that's a good one. It's been quite a fun process to like make these videos because it's like, someone says, what's a good thing I should do? Well, I had to break all this stuff up into little drills and rep them out, like you go to the gym. And a lot of them I can remember, a lot of them I wrote down, a lot of them I didn't. A lot of them I still do. So they're the ones I've done already, but opening range, measured move. Okay, I'll make one of those. You know, it's not a perfect strategy. Okay, so it's not just like buy and put your order at the top there. It's like we've broken out of this range. That means we probably need to do 20 points that way or 20 points that way. But, you know, you're up here now, so it's probably not going to be down there. You know, in days like this that it doesn't get it, but you did get the direction. So a lot of Al's books on the open talk about this. We've broken out of that range. Don't fade it. Just try and get on board. Here, I think here we got it and reversed on the dot, didn't we? Or just, yeah. Oh, that was my session as well. So I got out. I was feeling really happy with myself. I missed all of this, so I didn't do a great job as a presenter for that bit. I took a great trade there. And then here, you know, here, didn't quite get it. So, drills. Is there a set number of bars? No, look, this is where every trade is going to give you a different point of view. I would look at the number of reversals, and you need more than 2. So, gap up, bear bar with follow through, bull bar with follow through, bear bar with follow through. Here, now we've got more than 2 reversals, so we've basically got a top and a bottom to break out. Sometimes it's 5. 5 actually comes up a lot. Rose was really nice. She mentioned that on my session. I forgot to add that. So you have a double top, a double bottom. That's breakout mode. People are short, people are long. One of the sides is going to win. So that's number of reversals. You can also cheat and look at the 60-minute chart just to cheat. You know, what's the first 60-minute bar? Let me put a bar number under it. Bar numbers. That's what I want. So the first bar of the day, 60-minute bar, is a bear bar closing on its low. So good chance that's going to have a small move sideways to down. Here, very strong bull bar, small second leg sideways to up. So I like to use the 60-minute chart, but you've got to be trading, you know, a few more hours to pick it up. Yeah, otherwise traders will be like, oh, 6 or 12 or 18. So yeah, I think what they're saying is look at the 15-minute chart, look at the 60-minute chart, look at reversals, find a box that could get a measured move and just be open to either. Minimum number of points. Hey, it depends. It depends what size you're trading. Depends on how long you're trading. I don't really judge myself on points. I used to. You know, some people use like, you know, can you make 40% of a day's range? So that range is 50 points. Okay, so can you make 20 points? That's not a bad system, but you can trade that on a small size and just practice hitting the swing. So, you know, maybe you got a piece of the short there for 10 to 15 points. You know, maybe you made 5 points sideways to up. Maybe you sold somewhere in here. It wasn't very clear. I wouldn't be selling so low in a trading range usually. But it was, you know, you probably wouldn't have made any money in here, and you had to wait to do that. So I would just focus on getting clean entries and clean exits, even if they fail, especially the exit. And then you just trade a size where you don't need to become a professional trader today. I know that sounds stupid, but I kept turning up to the market saying, oh, and I'll just fix this one thing, and then next week I'll quit my job. I'll become a professional trader. That's a really dumb idea, and it took me many years to clean that out. That intention means I'm not even paying attention to the chart. I'm thinking about, you know, buying a bigger car. So you know, if you're trading breakouts second leg trading, you have the most number of opportunities. So, you know, this is a bull breakout, you know, trading a second leg up, the wedge. This is a spike. This is a second leg up. This is a weak looking pullback. Maybe you got another breakout there. Bear micro channel, selling somewhere in here for a scalp. You know, buying or selling either in there for a scalp. And then this was quick at the end of the day, so probably nothing. You know, 1, 2, 3, 4, 5, 6. So there's about 7 trades in there. You know, and if you can make 3, 4, 5 of them work and keep the losses small, then you've got a system that can just be improved on. Yeah, clean exits. Stop hitting market orders and market exits. You know, really start practicing putting the line on the chart. Where's the exact trigger price I want to get in? Where's the exact exit? That precision is going to mean every trade's going to be just a little bit cleaner. A few extra points, and that might be what you need to feel positive about trading. So, awesome. Thanks everyone. I hope you found that valuable. You're welcome to catch me on Discord. I'm on the Brooks Price Action in the room there. Look for Tim F. I'm in blue. I'm one of the admins there. You can send us a message. Otherwise, have a great weekend and hope you have a good trading week. And I'll catch you next weekend. Take it easy, everyone.